Think you can't unlock the biggest real estate tax write-offs like a cost segregation or bonus depreciation just because you or your spouse have a regular W-2 job? You absolutely can, and for a lot of Boston and Northeast families, this is one of the most overlooked tax advantages in the game. I'm Jarrett Lau, and I own over 50 plus cash flowing properties right here in the greater Boston market. Today, I want to show you how you can still qualify as an active real estate investor and unlock massive tax savings, even if one of you works outside of real estate. If you're married and you find jointly, only one spouse needs to be able to meet that IRS real estate professional criteria. Most people, including a lot of CPAs, miss this key detail. This is how it works. The IRS says if one spouse qualifies as a real estate professional, meaning they spend at least 750 hours a year on real estate activities, and more than half of their total working hours are in real estate, both spouses get the benefit of on your joint tax return. This means that you can use the big paper losses from cost segregation or bonus depreciation to offset not just your rental income, but also your W-2 salary, business income, or even your spouse's paycheck. Let me give you a Boston real-world example. Imagine you're a full-time nurse and your spouse is a licensed real estate agent or manages your rental portfolio hands-on. If your spouse spends 800 hours a year actively managing properties, leasing, supervising renovations, or working deals, and that's more than half of their total working hours, you both qualify as active real estate professionals. Now, let's say you do a cost segregation study and you create $100,000 in paper losses this year. Because your household is active in the eyes of the IRS, you could potentially use that loss to wipe out taxes owed on your W-2 income, not just your rental profits. This can literally mean tens of thousands of dollars in real estate tax savings that you can reinvest, use to pay down debt, or fund your next deal. A couple of critical details to remember. Only one spouse needs to be able to meet that IRS test, but that spouses really do have to do the hands-on work, being an agent, property manager, or truly being an active landlord, not just an investor in name only. You track your hours and activities carefully. If you're ever audited, the IRS will want to see proof. As always, this is not legal or tax advice. I do always suggest talking to a qualified CPA or real estate tax pro before making any big moves, because rules can change and every situation is unique. If you want my real estate professional status checklist for couples, a detailed list of qualifying activities, or a tracking spreadsheet that you can hand right to your CPA, just comment Married Pro in your city below or DM me directly. I'll send you my resources so that you can show your accounts exactly what's possible. Subscribe for more advanced Boston-focused tax and investing tips. And in one of my next videos, I'll break down how to maximize your write-offs even if you're just starting off with one property. I'm Jarrett Lau. Thanks for watching, and I'll see you in the next one.